Have you ever stopped to truly consider what happens to your digital assets when you entrust them to a cryptocurrency exchange? In a world where headlines often scream about hacks, exploits, and lost funds, it's a question that keeps many crypto enthusiasts up at night. The decentralized nature of blockchain technology offers incredible freedom, but with that freedom comes immense personal responsibility, especially when it comes to securing your private keys. Yet, for many, the convenience of an exchange is simply too great to pass up. So, how do you navigate this landscape? How do you balance accessibility with an uncompromising commitment to security? Today, we're diving deep into a topic that is foundational to trust in the crypto space, the custody and cold storage standards of one of the industry's most prominent players, Gemini. While the crypto market is often perceived as a wild west of innovation, there are institutions working diligently to bring a level of security and regulatory compliance that rivals, and in some cases, surpasses traditional finance. Gemini, founded by the Winklevoss twins, has made trust as our product a core tenet of their operations. But what does that actually mean in practice? How do they back up such a bold claim in an environment that is constantly evolving and under attack? We're going to explore the meticulous, multi-layered approach Gemini takes to safeguarding your digital assets. We'll peel back the layers of their security architecture, from their robust regulatory framework to the intricate details of their cold storage systems. This isn't just about buzzwords, it's about understanding the engineering, the protocols, and the philosophy that underpins their commitment to protecting your investments. So, buckle up, because we're about to demystify the world of digital asset custody and show you why Gemini stands out in a crowded market. At its core, Gemini's security philosophy is built on the principle of acting as a fiduciary and a qualified custodian. This isn't just a fancy title, it carries significant legal and ethical obligations. In simple terms, it means Gemini is legally bound to act in the best interest of its clients, holding their assets in trust. This is a crucial differentiator in an industry where many platforms operate with less stringent oversight. Gemini is a New York State trust company, regulated by the New York State Department of Financial Services, NYDFS. This is a big deal. The NYDFS is one of the most rigorous financial regulators in the world, and obtaining a BIT license from them isn't a walk in the park. It requires demonstrating an exceptionally high standard of compliance, capital reserves, and, critically, security protocols. This regulatory oversight isn't just a stamp of approval, it means Gemini is subject to regular audits and examinations, ensuring they consistently adhere to these high standards. Now, let's talk about the bedrock of digital asset security, cold storage. For those new to crypto, cold storage refers to keeping cryptocurrency offline, completely disconnected from the internet. This is the ultimate defense against online hacking attempts. Imagine a fortress, impenetrable by digital means. That's the idea behind cold storage. Gemini takes this concept to an extreme. The vast majority of customer digital assets held on Gemini are stored in their proprietary, secured offline cold storage system. We're talking about private keys, the cryptographic sequences that control access to your crypto, being held on hardware security modules, HSMs, that are never connected to the internet. But it's not just about being offline. Gemini's cold storage system is geographically distributed, meaning their facilities are spread out across multiple, distinct physical locations. Why is this important? Because it mitigates the risk of a single point of failure. If one facility were to be impacted by a natural disaster, a power outage, or even a targeted physical attack, the other facilities would remain secure, ensuring the integrity and accessibility of your assets. These facilities are also designed with multiple layers of physical security, including biometric access controls and rigorous surveillance. Think about it. To even get close to where the private keys are stored, you'd have to navigate a maze of physical barriers, each requiring authenticated access. Beyond the physical security, Gemini employs advanced cryptographic techniques to protect the private keys themselves. This includes the use of multi-party computation, MPC, and multi-signature, multi-sig, technology. With multi-sig, a transaction requires multiple independent approvals before it can be executed. It's like needing multiple keys to unlock a vault. For example, Gemini uses a 3 of 5 multi-sig scheme for its hot wallet, a small portion of assets kept online for liquidity, meaning at least 3 out of 5 authorized signers must approve a transaction. This dramatically reduces the risk of an individual compromise leading to asset loss. Even key Gemini executives, including the founders, cannot individually or jointly transfer customer funds in or out of cold storage. This internal control is critical for preventing insider threats. Another crucial aspect of Gemini's custody standards is asset segregation. This means that customer funds are held in accounts that are entirely separate from Gemini's operational, business, and reserve accounts. They are legally distinct and identifiable as customer assets. This is fundamental for consumer protection, ensuring that even in the unlikely event of a company insolvency, your assets are not commingled with the company's own funds and are available for withdrawal. Furthermore, Gemini operates as a full reserve exchange and custodian, meaning they hold all customer funds 1:1. Every dollar or digital asset you deposit is held and available for withdrawal at any time. They don't engage in fractional reserve banking with customer funds. Insurance is another vital component of their security framework. While cold storage offers the highest level of protection, no system is entirely impervious to every conceivable threat. Gemini maintains substantial insurance coverage for digital assets held in both their hot and cold storage environments. This insurance, provided by a consortium of leading insurers, covers certain types of losses due to theft, hacks, or other malicious acts by third parties, as well as internal collusion or negligence by Gemini employees. This provides an additional layer of reassurance and protection for users, a safety net in an otherwise volatile landscape. It's important to note that the specific coverage amounts and terms can change, but the commitment to insurance remains a core part of their offering. Beyond the institutional-grade security measures, Gemini also empowers its individual users with robust account security features. Two-factor authentication, 2FA, is mandatory for all accounts, adding a critical layer of defense beyond just a password. Users can choose from various 2FA methods, including SMS, authenticator apps like Authy, or even more secure hardware security keys like YubiKey. For enhanced control, Gemini offers withdrawal address whitelisting, allowing users to pre-approve specific cryptocurrency addresses to which funds can be sent. This prevents unauthorized withdrawals to unknown destinations, even if an attacker gains access to your account. With that said, thanks for watching, and until next time.